morning, good afternoon, and good evening, wherever you are. Hello and welcome to this webinar about sanctions developments and compliance challenges in the Middle East. My name is Karel van Randwijk, the Chief Growth Officer at Themis. It's a privilege to be moderating today's session, which we have organized jointly with Dow Jones as part of our Middle East Anti-Financial Crime webinar series. I understand that we have attendees from Asia, the Middle East, the Levant, North Africa, Europe, and North America, a truly international audience. Welcome to all. As the political and economic priorities of global powers and international bodies continually shift, so too does the international sanctions landscape. The Middle East remains at the center of many of these recent sanctions developments, as the evolving situations in Afghanistan and Iran currently remind us. In light of the complexity and volatility of sanctions risks, awareness and understanding of the potential risk exposure is critical for organizations operating in the region. In today's webinar, we will be discussing key challenges, best practices, and regulatory expectations when it comes to sanctions compliance for businesses across the Middle East. What should organizations be doing to stay on top of complex sanctions lists, and how can they avoid the costly consequences of sanctions breaches? We're honored to have a panel of leading experts from the region to address these questions with us today, and I really look forward to hearing their practical insight. It's a pleasure to introduce our distinguished and very experienced panel of Shahdan Jabali, Eric Son, and Muzaffar Khan. Shahdan, the group head of legal and compliance for Bank Audi. He is also chairman of the Compliance Officers Committee of the Association of Banks in Lebanon. Prior to joining Bank Audi in 1997, Shahdan was the managing director for legal and compliance at Citibank, Middle East and North Africa. And before Citibank, he was in private legal practice in the US, with focus on commercial and banking matters. Shahdan is a former Lebanese judge and a member of the New York and American Bar Associations. Eric, the global market strategist and product director of Dow Jones Risk and Compliance, bringing over a decade's worth of experience in the regulatory compliance field. He is Dow Jones subject matter expert on economic sanctions and anti-money laundering, and is the editorial lead for Sanctions Insights, Dow Jones's weekly newsletter of sanctions, news, and analysis. He also speaks on a regular basis at regulatory compliance conferences and has been published numerous times on compliance topics in publications such as ACAMS Today, Money Laundering Bulletin, and KYC 360. Muzaffar, the group head of financial crime compliance at First Abu Dhabi Bank, and has 30 years of banking experience with Citi and FAB across multiple jurisdictions. Prior to joining FAB in 2018, Muzaffar worked with Citi for 27 years across first and second line leadership roles in Pakistan, UAE, Bahrain, and the UK. During his tenure with Citi in the UK, he was consumer anti-money laundering lead for the EMEA region, followed by AML head for corporate investment banking and markets and securities services for EMEA. Before we kick off, I'd like to ask our audience an initial question to set the scene and better understand everyone's views about the issues we will be discussing today. So here is our poll. Are you concerned about the sanctions risk to which your organization may be exposed? You should be able to tick one of the options on your screen. And while we're waiting for the audience and to complete the poll, here is a slide with the recent financial crime survey that Themis conducted amongst a series of Middle Eastern contacts and respondents. And as you can see, fraud is the main issue that many organizations are concerned about, followed by money laundering, cybercrime, sanctions, and bribery and corruption. it's interesting how those 5 really stick out above all the others. And what we also found was that about 45% of our survey respondents said that they were very concerned about the sanctions risk their organization is exposed to, but felt they had a good sanctions program in place to prevent breaches. The audience poll should be coming in fairly shortly, and looks like the majority of you in the audience believe that you have a sanctions program in place to prevent breaches, and that you seem to be quite satisfied with it. However, there's a good chunk of you and a sizable proportion believe that you should do more to address this specific risk. If I could now turn to the panelists to hear their expert views on this important topic. Muzaffar, if I could start with a broad question about the very latest sanctions developments. From the turmoil in Afghanistan to continuing uncertainty about a return to the Iran nuclear deal, the Middle East is at the heart of the changing global sanctions landscape. Would you share with us a couple of key recent political developments that organizations in the region should be considering from a sanctions perspective?
So I think in terms of what we see, what we believe is that Biden administration is going to optimize the sanctions to so that they are easy to follow and they're more effective. But what is remained to be seen is whether or not US comes back to JCPOA, number one, and number two is, if they do, what about the sanctions which were imposed during the time when they left JCPOA and they would join now? And I think what would also remain to be seen will be what will be the expectations of Iran in terms of how they progressed during this period when US left and they said, okay, then we will go ahead with our own program which we were working on previously. So this is a really important subject. And why it is more important is also primarily because of the secondary sanctions. Because as we know that 68% of the STNs under secondary sanctions program are related to Iran, and which makes it very difficult for us because of no US nexus, arm's length commercial activities, and primarily from a UAE or from a Middle East standpoint, where we have this a lot of activity. So it is very important to identify who we are dealing with, what is the activity, and stay away even if it is non-US nexus. So it's interesting times. Quite I would say I don't know whether it has been as interested before. Eric can probably show some insights into that, but we'll have to see, I mean, how things move on.
Yeah, Muzaffar, thank you very much for that insight, especially as you're in the middle of the region there and having to see all the different changes that are going on. And also as Iran is on the other side of the Arabian Gulf to the UAE. Eric, if I can turn to you, and firstly, your views on what's happening at the moment in Afghanistan and Iran, and then another question around sanctions in the Middle East.
Okay, let me give you the two quick things. I don't want to take too much of the time on the previous question. But on Afghanistan, what I'd really look for is not so much the sanctions, because the sanctions will come barring a real change in behavior of the Taliban. What to look for are what's going to be the humanitarian exceptions. What will be the mechanism for being able to send aid? Because the U.S. recognizes the fact that Afghanistan really does need a humanitarian channel. And so they have to figure out how that's going to work. You know, it really varies from program to program in the United States. For example, North Korea, you can only send aid through an NGO, while there are other programs have exemptions that basically say, as long as you avoid named persons, you can do this. I would consider that since the Taliban runs the whole government, it's going to be interesting. I don't know if you may require a mechanism like they have for Iran, the Swiss Humanitarian Trade Arrangement, SHTA, which, while hasn't seen a lot of volume, has seen some. So that's the commentary on Afghanistan. Regarding Iran, just want a real small thing. In addition to the secondary sanctions, it's really important to remember that Iran is the only U.S. program where non-U.S. persons are actually subject to. There are prohibitions that are regarding non-U.S. persons, in particular, re-exports and exports of U.S. origin goods. It's the only program where that happens, but you've seen in the case of ZTE, for example, where their incorporation of U.S. Chips in their phones ending up in Iran led them to pay a penalty. So that was all I wanted to say on that previous question.
Yep. And that then is a good segue actually to the next question about transshipments, because there is a significant amount of sanctions exposure associated with Dubai and other Middle Eastern hubs as major transshipment locations. So would you be able to elaborate on some of these risks for our audience today?
Sure. I mean, it's great to be a hub, right? Everything goes through you. On the other hand, because everything goes through you, it brings a lot of scrutiny. It's also really important to understand there's a difference between the technical definition of transshipment, the one that one might think about in commerce, and the way that regulators think about it. In commerce, transshipment is something goes to a country. Usually, it changes. It changes tracks. It goes, say, from ship to rail or ship to a truck, and then it ends up in another country. But from a regulatory standpoint, it means that the end-to-end transaction at some point goes from a non-sanctioned country to a sanctioned country. So if you send a good to a distributor in the UAE, and then that distributor then sells it to someone in another country, that's transshipment. It doesn't have to be the same transaction. It can be a separate transaction because the chain of custody of the goods is what matters. The end-to-end custody. Now, what are the actual consequences of your end-to-end transaction touching a sanctioned party? So first of all, if you are seen as providing assistance to a sanctioned party or a sanctioned country such as Iran, that can get you sanctioned, which is the worst thing, because not only will parties in the U.S. not deal with you, but there are a lot of risk-averse countries around the world that either formally or informally will say, pay attention to OPEC. Maersk doesn't deal with Iran anymore because they were more concerned about losing their U.S. business than they were about maintaining their Iranian business. But there's also commercial considerations. If you're involved in a transaction that ultimately gets stopped because someone recognizes the sanctions implications, then all of a sudden you got an unhappy customer on one end because their transaction actually probably both ends, because their transaction didn't get completed. In addition, anyone who notices that you were part of that chain could choose to stop dealing with you. Now, I want to give time to the other panelists, but what's really important to understand is there's increased visibility of all of this. Number one is, so I do for ACAMS, I do training in their sanctions certification, and transshipment is part of that course. The need for end-to-end due diligence of an entire transaction chain is part of that course. In fact, the need for that kind of due diligence is part of the framework document. It was May of 2019, OPEC published a document called A Framework for OPEC Compliance Commitments, and it specifically talks about the need to do due diligence on your counterparties and on your supply chain. And we see a series of enforcement actions that touch on this kind of stuff, such as PACAR, where trucks that were sent to a party in Russia ended up in Iran. Apollo Aviation, where an aircraft engine leased to a UAE firm was then subleased to a Ukrainian firm and put on a Sudanese airline, and and on and on. There's not a lot of them, but the fact that the UAE comes up from time to time means that there is increased recognition. We even mentioned the UAE in the class as being a major transit hub and therefore being enhanced risk for transshipment. I think that's a good place to stop. I'm sure I could go on for the entire hour on this, so let's leave it there.
Eric, thank you very much. And yes, giving all of these examples highlights the importance of suppliers to do thorough due diligence of their entire supply chain, both up and down the supply chain, because they will get caught if their products end up in sanctioned countries or with sanctioned organizations. Shahdan, if I could turn to you now. A key theme that you and I have spoken about in the past is the particular attention that financial institutions and other organizations in the Middle East must pay to US sanctions due to the US dollar's global dominance in the world's financial markets and its role as the primary payment currency for international trade. Would you tell us a bit more about the impact of evolving US sanctions legislation on banking in the region? And you're on mute at the moment. There we go.
Yeah, hi. Thanks for the question. First, I would like to make a comment on the poll. In my view, irrespective of the facts of any given entity, because a U.S. sanction is so overreaching, I tend to believe generally, without commenting on specific fact, that every institution in this part of the world with client money in business cross-border would have some exposure to sanctions. So, I would like to caution those colleagues who said we have no exposure to sanctions. They may or may not have, but my recommendation is to look at this point more carefully. The second point is an obvious point. Even though we have a robust sanction compliance program, this program requires regular updating. In connection with the question, let me start with the basics. I'd like to first describe the unique nature of U.S. sanction. It's not a traditional typical law. It's not like the UN. It's not like the EU. It is in place to support foreign policy objectives. Therefore, one needs to pay attention to two factors: how the text of law are evolving and the foreign policy consideration that drive the use of the sanction stick. The U.S. government has a wide discretion of its use, and it could apply even in cases when no U.S. nexus exists. The use, for example, of currency besides the dollar doesn't necessarily shield in a given situation the concerned person or entity from sanction risk. Concerning Middle East players' exposure to sanction, I would say look at the map. The map, our map is very interesting and very telling. So all you need to look at that map and say, I am exposed to sanction, my clients are exposed to sanctions. Look at the countries, the player, the business relationship, the challenging political question. That should give you a clear indication of a real sanction exposure. So, bottom line, sanction is a main topic for us. In terms of international trade, especially in the U.S. with or from the region, what remains essential for and on an ongoing basis is a better understanding of the customers, their transaction, the countries involved, the products, country of origin, and the real beneficial owner, which is also taking more attention nowadays. This with the necessity to have skilled compliance resources that are equally equipped with business as well as rules knowledge. This knowledge is beneficial for proper compliance and for enhancing business opportunity and supporting quality and durable earnings. So sanction is a top topic that should take the attention of skilled officer and should, as important, remains a key topic on the main table of every institution in this part of the world.
Yeah. Shahdan, thank you for that. And it just highlights the importance in a financial institution, and particularly a bank that's involved in cross-border payments, the need to understand the end-to-end payments from who is initiating a payment to where it is finally going to end up, and who, as you say, the beneficial owner is. Eric, if I could turn to you, please. Ever since the introduction of the seminal U.S. Magnitsky Act in 2012, sanctions have as a tool to put pressure on perpetrators of human rights violations worldwide. And as Shahdan recently said, as an extension of U.S. government foreign policy. And more countries are introducing their own human rights sanctions regulations. We'd be fascinated to hear more about this trend and how it's playing out in the Middle East specifically.
Well, let's just start with the general point is that in general, human rights sanctions are from a foreign policy standpoint, right? Or which is what sanctions are. They're a foreign policy tool. It's challenging. Are you trying to punish the individuals for the acts they've committed, or are you trying to really impact the country that they're acting on behalf of? You know, most of these people are state actors in one way, shape, or form. So do you want to have a global program like Global Magnitsky, which is for, in theory, every corrupt actor and every human rights abuser in the world? Or do you put those abusers under the country-based program because it's really a reflection of what of the dealings with that individual government? And you know, with regard to the broader Middle East, you know, we mentioned Afghanistan. I'm sure there are people that are on the line that will say Afghanistan is not part of the Middle East, and technically they'd be right. You know, some people might question whether or not Turkey is, but there have been some designations that have been made. So the U.S. has, of course, made designations on people that were implicated in the Khashoggi murders under Global Magnitsky. There were a number of Turkish officials that were sanctioned for the imprisonment of the U.S. pastor Andrew Brunson in 2019, and that actually got the attention of the Turkish government, who then released him, and voila, the designations got unwound. But you know, there are other designations that are made in those guys, but under that program, as well as the Russian-based Magnitsky program. But it's also important to understand that sanctions are not just what we think of as OPEC sanctions. For example, the entities that are involved in the forced labor in Xinjiang, they're not necessarily on the SDN list. They've been put on the Commerce Department's entity list. Now, again, remember, sanctions is a matter of economic pressure in order to induce a change in behavior or express disapproval or make things more expensive or harder to complete, right? So what's the purpose of putting someone on the entity list? Well, it cuts you off from U.S. components and U.S. suppliers. So by doing that, by putting these parties on the entity list, it cuts off their ability. For example, ZTE and Huawei, it cuts them off from components they need to produce their end goods. Now, also more broadly, now you see that there is a greater trend to imposing sanctions. The UK and the EU and Canada have all created global human rights programs. In fact, some of them I think have called it the Magnitsky program, and Australia is also considering it. But there's also rhetoric, for example, the recent joint statements on the goings-on in Cuba. But let's take a couple seconds just to talk about the real implications, which is that for persons, unless you're an oligarch like in Russia, or unless you are trying to get your money out of the country because you're corrupt, probably not a lot of implication for you. If you remember when the sanctions were put on Hong Kong, there was that official who went at a press conference, waved the $100 bill and said, "Here, Donald Trump, I'm going to mail this to you so you can sanction it." But for entities, particularly state-owned entities, and the private firms that support them, this can be pretty harsh, especially if you're talking about the entity list, because not only is the U.S. a significant source of components, we're also the world's largest consumer market. That's one of the things that gives us the economic power to actually be aggressive with sanctions. Same thing with basic commodities. Why do the oil sanctions on Iran work? Because oil is generally traded in dollars. Precious metals are generally traded in dollars. It gives us a unique position that others really generally can't match. So I would, if I were a bad guy, I'm not so much, the individual shouldn't worry all that much, although obviously, there are travel sanctions. It's really the input on the issue, the impact on firms and government entities that has the real impact here.
Eric, thank you very much for those insights, and very helpful in framing the issues of sanctions. Mustafa, since many of our audience members are from UAE-based organizations, I'd like to spend a moment talking specifically about sanctions risks in the UAE itself. Last year, the FATF issued a seminal mutual evaluation report on the UAE, which highlighted gaps in the implementation of targeted financial sanctions and private sector awareness of these. Based on your experience heading up financial crime teams in the country, could you help us better understand the current UAE perspective?
Sure. And I think one thing what I would start is that on balance, the FATF mutual evaluation review, UAE figured okay when it came to the technical compliance. It was more issues or concerns on effectiveness scale, and that was primarily because what they could see in terms of laws and regulations were relatively recent. So it was more of a wet paint, which caused more concern. In terms of what UAE has done since then is phenomenal. So it has been incredible change in terms of they have established executive office on AML and CFT by the UAE cabinet. There were a number of regulations which have been issued. There have been a lot of guidances which were issued by the central bank. And at a country level, what they've done is they have brought everyone together, all the regulatory bodies, all the licensing bodies or registration bodies. There's a much more effectiveness in terms of private-public partnership. I mean, not directly, but partly related to sanctions, but also effectiveness of STR filing. And I think one thing which we haven't seen as much before is now the enforcement agenda. So you might have seen there have been a number of enforcement actions taken by the UAE. And the other thing which the country has done is the prosecution of predicate offenses and taking people to the task, that it is not only in what you can see on the paper, but what you can also see in terms of happening. I think at a more practical or more like a day-to-day effectiveness level, like I mentioned, there's been trainings, there's been industry seminars which were conducted by central bank, and also what central bank has done is they have created the sanction thematic review of systems testing and validation, where they have assessed the screening systems and tools which are used by different organizations, not only on effectiveness scale, but also from efficiency scales, and they have shared the results. They've already done 2 rounds of testing, and they have shared what the organizations or financial institutions have missed in terms of the true hits, and also what is it where we are generating more noise than we should actually be. So a lot, like I said, has happened, and it is happening. Risk-based supervision is also on top of the agenda, and even during COVID times, central bank or the government didn't stop. There were a lot of activities which continued in terms of the reviews, whether those were off-site examination reviews. So a lot is happening, and yeah. So I think it was a great turnaround, the way I would see it.
Yep. Thank you, Mustafa. It would seem from what you've just said that the FATF report was a real catalyst to change the mindset and then the approach from the regulators, and to bring everybody together to improve their approach to financial crime and addressing those particular issues.
Sure.
Thank you, Mustafa. Shahdan, from your perspective as group head of legal and compliance at a leading bank in the region, what are some of the main practical challenges that MENA-based financial institutions may face when trying to ensure sanctions compliance? Is it mainly around systems and controls, training and awareness, or something else entirely?
In a complex situation, you go back to basics. Many people talk about compliance culture. My understanding is compliance culture is a culture that is embedded at all levels of the organization, with a strong and clear tone from the top, and the proper formulation and maintenance of an effective sanction compliance program that is enterprise-wide. I would like to elaborate on that and talk about sanction liability from U.S. law perspective. And what I'm going to say now in connection with the sanction compliance program applies equally to an AML compliance program. There are 3 possible bases for an entity sanction liability. One, the mistake is intentional, okay, which happens sometimes. And, we have seen a number of situations where some financial institution got penalized for stripping information. That was an act of intent. This is very bad. And, the sanction applications are really material. And, you really need to work hard to really get rid of it. I would like to focus more on the second point, which are repetitive cases of repetitive unintentional mistake that once added together represent systematic failure and a deficient compliance program. I think this point is the risk of every financial institution. Because in a situation, difference between a scenario where you have a proper compliance program, if you have an infrequent and incidental mistakes, those mistakes are generally tolerated by the regulators. But if you have a number of small or even mistakes that happen on a regular basis, that shows an ongoing weakness, it would be an indication that this entity is not really paying attention to compliance program and has a culture on form but not in substance. So therefore, even though this statement is very traditional, one needs to look very carefully at every element of an effective compliance program. And if an entity is doing business in more than one country, this program should be coherent. The policy, the direction, the tools, the resource should be the same. And it should not be a fragmented program. It should be an enterprise program that is driven. If you have this, even if you have a mistake, this mistake can be generally cured without major difficulty. If an entity falls in the risk of category 2, one of the many implications is the application of Section 311 of the Patriot Act, and consequently, the loss of correspondent banking. If there is a loss of correspondent banking, then there is no cross-border banking transaction. It is a reality that is very, very detrimental to an entity that would very much end up maybe fatal to that entity. So therefore, compliance officer need to look very carefully and need to monitor how often do we do mistakes, monitor those mistakes, correct them. Without this, we may end up unintentionally with the risk of giving an indication to regulators and to other players concerned that we have a compliance program that is weak and we don't deserve to belong to the global financial entity.
Thank you, and to Shahdan for that. And that's a great point to finish on about the importance of banks as part of an international banking community. Because if you lose your license to operate, particularly on the correspondent banking, then it really diminishes your ability to service your clients. Before moving on to Mustafa for the penultimate question of the panel, Eric, you wanted to make a few observations on what Shahdan has just said.
Yeah. Actually, I couldn't agree more with Shahdan. It's, in my previous job, I was doing some consulting work, and my very first client was Bank Julius Baer in Switzerland. And I asked him, I said, why are you screening against Opec? He said, because the one thing we can't do, we cannot lose our U.S. dollar correspondent account. If we lose our correspondent bank in the U.S., we're out of business because we can no longer service clients who want to conduct international trade if we don't have access to the dollar. And again, it doesn't have to be the dollar. It could be the euro. It could be the yen. It could be whatever. So it's really, really vital. And the fact is that, there is now a sanctions due diligence process that firms conduct, very much like the due diligence process they conduct for AML. And so if they recognize that your program is less than stellar, at best, you could have commercial implications of having, less than great pricing attached to your business. If you even get that business, you may be rated as a higher risk. So it behooves you to dot those I's and cross those T's, because the commercial implications are actually probably worse than the regulatory ones. And a really good place to look at, as I mentioned before, is this framework document, only because it's the only thing of its kind where it gives you guidance as to what OPEC, for example, thinks makes for an adequate compliance program in sanctions. Again, it's not binding anywhere other than, it's not even really binding in the United States, but it's a really good benchmark. That plus benchmarking yourself against the reasons why people get enforcement actions around the world. If you can look at those too, that's a great way to figure out if you're doing things right or not. But I couldn't agree more that fixing those unforced errors is vital.
Eric, thank you for those additional points, just highlighting the importance of not being sanctioned and maintaining your ability to do international business. Mustafa, we've spoken at length about current sanctions-related risks and challenges for MENA-based organizations. I'd like now to focus on the very real implications of getting all of this wrong via sanctions evasions and violations. These span from regulatory penalties to reputational damage and customer loss, which is what Shahdan and Eric have just mentioned. What do you see as the most impactful consequence of not having the right sanction screening program in place? And are there any examples that you can think of which might highlight this?
So absolutely, and I think what Eric and what Shahdan was saying, it's not even a hypothetical risk. It is an actual risk. We have seen this happening with one of the Latvian banks, right? When they lost their license, correspondent banking relationships, then there was a run on the bank, and then they actually went down. So that is extremely important. And now, the Middle Eastern banks, we actually face more regulators. So one is the local regulators, the global regulators, and then the global regulators are driving their own agenda in the right sense, not in the wrong sense, is through the global financial institutions who provide the clearing. And primarily the clearing related to US is what we see. And Julius Baer's example was one of the very relevant and pertinent example. I think in addition to that, what we have also started to see is the direct enforcement of the bank staff. So not only the banks, but the prosecution against the bank staff, the customers actually. So whether it is willful blindness, whether it is the systemic risk and the fines from the regulators. So I think the whole gambit of things, or the regulatory landscape, it is really coming together. It's if there was any regulatory arbitrage before, that has gone away now. So now it is extremely critical for us to make sure that we have we have a strong, robust sanctions program, or the overall compliance program. And the examples which were given before is what we have seen. The banks who have been fined, their staff has been also, there have been prosecution against their staff and their customers as well. And also, I think, going back to the point of technical ability. So it is not only now having a sanctions officer's job to generate alerts and see whether some alert is right or wrong, but also to see the red flags, also to conduct due diligence, go beyond what was just a very operational activity before, because we talked about secondary sanctions risk, we talked about what it can do, and we have seen it in case of Turkish SSB. We have seen and I'm not going to take the names of the banks, but some of the regional banks who were also impacted from their correspondent banking relationships or their clearing relationships at a global landscape. So yeah, the impact of this going all wrong is significant, very material. It is not only hypothetical now; it's very real, and we are seeing it now, very, very clearly. That's how I would put it.
Okay. Thank you, Mustafa. And again, some really good examples of practical situations where financial institutions need to take care of putting the right structure and compliance program in place to adhere to sanctions needs. We're now 45 minutes through the webinar. Time has gone really quickly. Just one last question before we move on to audience Q&A. And for Shahdan, I want to ask whether, based on your wealth of experience as both the respondent and correspondent end of banking relationships in the region, you had any best practices that you could recommend and share with our audience today, particularly those that are working for MENA-based banks and operating in the Middle East. You're on mute. Sorry.
Okay. A basic tenet that we all know on correspondent banking, that correspondent bank process transaction relating to our clients and their transaction. So those transactions and clients are not only subject to our local rules, they are subject to the correspondent bank rules. So monitoring the evolvement of US rule in this situation, since we are talking about US sanction, is extremely important. At the end of the day, a correspondent bank will only accept to maintain a relationship if this relationship is financially beneficial and if the compliance risk is properly managed and addressed by banks in the Middle East, but to the satisfaction of our regulators and the US rules and the satisfaction of US regulators as well. Now, to take one particular example that is current, that we need to pay attention to, is the recently enacted AML Act in the United States. The reason why I'm talking about it, not because it's a US law, because this particular US law has a number of important provisions that are relevant to us, and we need to understand it to convey that message of mutual compliance. It spoke, for example, about, every single financial institution that does correspondent banking with the US, we need to appoint a service process agent in connection with the compliance with this act. So, the minute you do this and you convey this to your correspondent bank, it gives them an indication that you are a sophisticated player and know the rules. Number two, there is an increased focus on the concept of beneficial owner, especially for entities doing business in the US. The third and last point, in the interest of time, that requires timely attention now, is the expanded subpoena power. Under this act, the US government had given an authority to US Treasury and the Department of Justice with expanded power over foreign banks that maintain correspondent banking relationship with US banks. So under this subpoena power, the US government has the right to request information or documents called record in connection with any account at the bank, as long as the records are relevant to the investigation that is taking place in the US. It's very important that we know this, we understand this. It's very important that we talk to our local counsel, because this particular provision that is very key, correspondent bank are key to respond to it, and they will force us to respond to it. So therefore, we need to give timely attention now with our local counsel to deal with any possible conflict between US law and local law, get customer consent, etc., etc. So this particular knowledge, and I emphasize on timely knowledge, give a message of assurance to correspondent bank and give us the tool to do proper correspondent banking that is compliant with our rule and US rules.
Thank you, Shahdan. That is very insightful, and I hope also practical for the audience that we have today. In terms of the panel itself, I'd like to wrap it up there, but if we could now move to audience Q&A, and we've received numerous questions from the audience, and I have one anonymous audience question, and if I can ask Mustafa to begin with to address this one. We've heard some say that sanctions is all about lists, but can you share examples of how or when states or state entities have circumnavigated sanctions, and how have they done this? And we might just ask the other two members as well to give some examples.
See, one thing we talked about before was that it's not only related to risks anymore. Right? It goes much beyond that. And even the central bank of UAE here, when recently they, in terms of issuing the guidance, they've also issued the red flag. So basically, it is something which you need to be cognizant of. I think earlier it used to be that AML had more investigative and sanctions was more operational. Again, on the cost of repeating my point, but now it is, and I know Eric believes that sanctions is much more interesting than AML or any other financial crime compliance program. But I think it is primarily because of now the way the entities, the countries, and the organizations, the sanctioned entities or the organizations, they have become smarter. We also have to become smarter to identify that how they circumvent the sanctions, whether they use POAs, whether they hide behind the ownership structure somewhere, and not come to the fore. So that is the key challenge here.
Yeah, ultimate beneficial ownership investigation is key as part of the customer due diligence process. Eric, I know that you have some views on this as well.
I'm going to make this one short because A, I've gone long, and B, I want to give some time to Shahtan. Give you the best example of where things go beyond the list. The recent EU sanctions on Belarus, restricting potash imports from Belarus. That's not a list. Knowing the things that go beyond asset freezes requires looking at regulations, looking at guidance, looking at frequently asked questions. End of story.
One sanction was merely a list. This was a long time ago. Sanction program and the scope of sanction have dramatically expanded. Take, for example, U.S. export and, the ban of exporting U.S. product or a product that has even a 10% U.S. component to a sanctioned country. Another example that is familiar to many people is a Cuban cigar. Has nothing to do with the list. And I think the most important provision that is commonly used and it applies in cases of secondary sanction, is a provision of significant support. The provision of significant support has 6 interesting, very clear elements. Last element gives an indication of how wide the discretion of U.S. government says any set of circumstances that the Secretary of Treasury, in consultation with the states, deems significant on a case-by-case basis. So yes, it is about names, but it certainly is not about names only. It's about many things, and that requires a very knowledgeable compliance resource to manage a proper compliance program.
Thank you. And we've got time for one audience question, and this is really one that's very up to date, looking at modern technology and that of blockchain. And if I can direct this one to you, Eric, and it's a question from Roger Burrett. How important do you feel that the development of blockchain will become for transparency of transactions in relation to sanctions? Perhaps this could be related to the prospective situation in Afghanistan and what might play out. Because, with blockchain, it's really decentralizing the financial transactions. So, I know that, and this is some of the research that we've done for the briefing note that'll come out after this webinar, that certain organizations have had to pay for circumventing sanctions using Bitcoin and blockchain.
Blockchain is not a panacea. Remember that all that blockchain truly does for you is guarantee the integrity of the data on the blockchain. It doesn't prevent fraud. It doesn't prevent sanctioned parties using it. So to find out the provenance of the use of a coin, from end to end, requires tracing it, requires having cooperation from the parties, the wallet providers, and the exchanges, because all you get in there, you don't get any kind of transparent name and address information. You get a wallet address, and so you need to be able to translate that, which requires cooperation. And so it has the potential, were it better regulated, to give you greater transparency. But the state of global the fact is there isn't really, FATF hasn't incorporated its recommendations on virtual assets. It's a guidance paper, but it hasn't been even incorporated into the recommendations yet. So one day perhaps, but today it's probably actually more of a harm than a help, just because of the speed of transactions and the anonymity. And by the way, we're talking, that's just something that's easy to trace like Bitcoin. Imagine using a privacy coin like Monero or Dash or Zcash, where there are privacy items built in. Right now, it's a financial crime risk and a large one. One day it may be a help, but not today.
Thank you, Eric. Mustafa, I see you nodding your head there as well. Any views from your position in a bank?
Again, I think I would agree with Eric and second that he used the word Panacea, that it's not going to provide a solution of Panacea, but again, the transparency and the cooperation, that is the key. Otherwise, it's not going to help.
Okay. We're coming up to the hour at the moment, and I'd just like to thank the three of you for your wonderful insights and your views and experience, and also the examples that you've given of how to address sanctions and the things to look out for, but also to our audience for joining us. And as I said, it is an international audience, which is wonderful. And we will be issuing a briefing note together with Dow Jones after this on research that we've done on sanctions and application of sanctions, together with suggested solutions on how to deal with them. And it is a real challenge at the moment in the Middle East with all the changes that are going on in governments as well as in policies. And Eric, you mentioned what's going on with the Biden administration and Iran and the various sanctions there. You've now got a new president in Iran who's probably going to take a more hardline view on what will be acceptable to their government in terms of sanctions and cooperation. So it's going to be a very interesting few months and years ahead on how to manage sanctions, both from a commercial perspective, so anybody looking to trade with Iran, and I'm thinking of the French oil companies and the Italian oil companies that previously did business there prior to the Trump administration withdrawing from the agreement. So a real challenge there, as well as banks looking to facilitate trade. A big thank you to Dow Jones for their support in organizing and broadcasting this webinar. It's always a great pleasure to work with you, and really look forward to the final two webinars in our series on trade-based money laundering and ultimate beneficial ownership of organizations in the Middle East. These sessions will be held over the next month and a half, so please stay tuned for information on the dates and times and registration opportunities. And finally, a plug for Themis. We have produced a number of country risk reports which highlight the financial crime risks and issues of operating in companies in the Middle East, together with suggested solutions on how to deal with them. So thank you very much to everyone, and goodbye until the next time.
Thanks, everyone. Have a great rest of your day.
Thank you. Bye-bye.
Bye.
Bye.